All right, let's just get right into it. We are doing a full, no-holds-barred thesis check on Palantir. Look, this stock has been on an absolutely incredible run, and frankly, that creates a huge problem if you're holding it. So the one question we're all asking ourselves is, did we miss the top? Or is this just getting started? And to make this real, this is not some theoretical exercise for me. I personally own 66 shares of Palantir in my tax-free ISA. And believe me, that position has been forcing me to ask some really tough questions lately. Because, as of this morning, those 66 shares have just ballooned. They're worth £8,286. Now, that is a fantastic problem to have, don't get me wrong. But it's still a problem. It's where your logic and your emotions really start to go to war. So this is the dilemma, right? Is this the moment to cash in, take those profits, and just run? Or is selling right now a massive, massive mistake? Are we about to jump off a rocket ship that's just barely clearing the launch pad? We need to figure this out. So the heart of the problem, really, is what happens when a stock you own just goes vertical like this. It's one of the hardest psychological moments you can face as an investor, because your rational brain and your gut are just pulling you in completely opposite directions. And this quote, this just captures that conflict perfectly. My deep fundamental belief is that Palantir is truly becoming the operating system for the entire Western world, for governments, for major companies. It's an incredible business. But after watching that stock price just climb and climb, man, every single bone in my body is screaming at me to just sell and take the money. And the source of all that anxiety? It's right here. It's the valuation. Palantir's price-to-earnings ratio is floating at over 200. Now, to put that into perspective for you, the historical average for the entire S&P 500 is somewhere around 25. A number like 200, well, that tells you the market is pricing in years and years of absolute flawless growth. And that is a very dangerous expectation. Okay, so before we totally panic, let's just take a breath and go back to first principles. Why did I even buy this stock in the first place? We have to revisit that bull case and see if the story is not just holding up, but if it's maybe even stronger than ever. The absolute core of Palantir's competitive advantage, what we call its moat, is this idea of ontology. See, they're not just selling you another piece of software or some AI chatbot. No. They are selling the entire framework. Think of it like the essential plumbing that makes AI actually work safely and effectively inside these massive, complex organizations. It's the thing that makes everything else possible. So here's the bottom line. The whole reason for holding Palantir really comes down to three key pillars. First, they are pretty much the only company out there that can make AI work at the insane scale required by the military and huge global corporations. Second, their AIP bootcamps are just a genius sales strategy, and they're converting new customers faster than anyone thought possible. And third, because of all that, their competitive advantage, their moat, just feels deeper and more undeniable than ever before. All right, the bull case is solid. I feel it. But you know what? Conviction without interrogation is really just a fancy word for gambling. So now we've got to do the hard part. We have to actively try to break our own thesis. We have to stare the bear case right in the face, and for Palantir, I call it the price of perfection. To do this, I have a very strict protocol. I don't go on social media, I don't listen to the hype. I turn to my AI agent, Mary Jane. Her only job is to be my chief risk officer. I gave her one simple but absolutely brutal question. Ignore all the hype. What breaks the Palantir thesis? And you know what? She didn't come back with a list of competitors. It wasn't about management. It wasn't some hidden flaw in the technology. Her answer was immediate, and it was singular. The single biggest risk to my investment right now is not the company. It is the valuation. The market is pricing in absolute, total perfection. And that perfection? It's like walking on a razor's edge. To justify the price of the stock today, Palantir has to execute flawlessly for the next 5 years. There is literally zero room for error. A tiny 1% miss on an earnings report could send the stock crashing down. If their growth rate slows just a little bit, say from 30% to 20%, the stock could easily get chopped by 30% overnight. See, the risk isn't the business itself, it's the insane weight of these expectations.
So what do we have? A world-class company trading at a potentially world-class dangerous price. You've got the bull case and the bear case pulling you in opposite directions. So to stop myself from making a purely emotional decision, I have to fall back on my system. I call it the family office protocol.
And the protocol is actually pretty simple. All it does is force me to think through the only 3 logical options on the table. Option A, I can trim the position, take some of those profits off the table. Option B, I can get aggressive and actually buy more. Or option C, I can do what is often the hardest thing of all, nothing. Just hold. So let's just walk through the logic here. Option A, trim, take that money and run? The verdict is a hard no. Why? Because the fundamental momentum behind the company is just too strong right now. They are winning, and selling a winner early is one of the biggest sins in investing because you destroy the power of compounding. Okay, what about option B, buy more? Again, that's a no. The company's great, but the price is just way too high. There is no margin of safety here, no cushion if things go a little bit wrong.
So after a pretty clear process of elimination, the protocol leaves me with really only one logical decision left, and that is option C, we hold.
But listen, holding is not a passive, do-nothing decision. It comes with its own strict set of rules. Rule 1, you let your winners run. You don't cut your flowers to go water your weeds. Rule 2, and this is so important, you do not add any fresh capital at this valuation. And Rule 3, this position is now on high alert. You watch it like a hawk, every single quarter, no exceptions. And really, that's the main takeaway from this whole thing. The protocol, the AI agent, this whole system, it's all designed to fight that constant urge we all have to do something. Because sometimes the most profitable, most disciplined action you can possibly take as an investor is to just sit on your hands. So I'll just leave you with this question. The price of holding Palantir today is definitely going to be enduring some extreme volatility and the stress that comes with a sky-high valuation. But what's the price of selling too early? What's the price of interrupting what could be a decade-long compounder? That's the real trade-off we're making here. And that gets to the very heart of our mission, to defend the compounding at all costs.